issue. Our approving this is not going to give him carte blanche to operate with a system that doesn't meet health department standards, because the health department's not going to let him operate. He's been in operation 8.5 years. We've taken his money.
Actually, for 28 years in this county.
So I don't see what the issue is. If he doesn't meet health department standards, he won't operate, no matter what we do. That's all I have to say.
Mr. Chairman. Mr. Underwood. Mr. Taylor, my comment there is, I'm just reading what's in the file here that says there's no record of permit. Right. How it came about, I don't know. Apparently, they don't know. His records are gone due to a fire. But obviously, I'm sure somebody had to put the system in, or there's a working system there. I'm guessing, Mr. Norton, is that correct?
Yes, sir. It was working when we moved in. The system was working.
It was Peck Recycling when that system
That's
went
correct.
in.
Yes, sir.
But again, I guess my question, I'm just concerned, but I guess it would be covered under the condition if we approve, I guess. That he'd have to bring it up.
Exactly.
Okay. All right.
Thank you, Board.
Any other questions?
Mr. Chairman, I would move then that we approve the special exception as presented with the conditions as listed, if I can get a second.
Motion made by Mr. Taylor for approval of special exception 03-2012. Is there a second to the motion?
Second.
Motion seconded by Mr. Akers. Discussion on the motion.
Mr. Chairman,
Mr. Black.
I guess my concern is I would like to see, I'm not sure if we're setting precedent here or not. I want Mr. Norton to be able to operate his towing business. I wanted Mr. Giles to be able to operate his towing business. My concern with this, however, is that we don't have a record that says we're getting something from the health department. We have no records for improved disposal system. So my concern is that I would like to see those records before I can make an approval. And if once I see those records, I have no problem with that. So thank you.
I understand. More discussion?
I have the same issue. I mean, the health department, no health department records were found for an approved sewage disposal system. Now, the health department didn't burn down. I mean, I've had to go find records from the 60s for septic systems. And I'm concerned what's there. And this has been delayed since November. I think it was an issue that should have been resolved. It was an issue then. It's still an issue. And I think that's been plenty of time. We were never told why it was deferred, and I guess I'm curious. I figured this issue was going to be resolved, and it still isn't. And I guess that's my concern also.
Okay. While any other discussion, while we're having this discussion, Mr. Fincham, if I could ask you one more time just to clarify the open discussion.
While Mr. Fincham is coming, I can explain why it was deferred. I want to. Mr. Norton spoke with me. We talked about his business and what we felt would be workable to make his business a positive business in the county. And he needed some time to make some additional conditions and meet some additional conditions. And so he agreed to defer it so that he could meet the conditions that we see listed here, which is what we ask businesses to do. He has worked with the county, and again, we have no problem taking his money. He pays fees, and he has lived up to, as near as I can see, what a good business should do. And in addition to that, our approving this will not allow him to operate, not one single day, unless he meets the code of the health department. So again, I say, why do we not want to approve his request when he has to meet the code as is presented by the health department? Now, if we want to do the health department's job, maybe we should get off the board and go work for the health department. Thank you.
Mr. Fincham, just to clarify the discussion that was going on before, if this special exception were approved, you would still not be able to issue a certificate of occupancy on the actual office building until the health department has given its approval. Is that correct?
Yes, sir.
If we approve the special exception and they fail to get approval from the health department, by definition, the special exception would then be void.
They cannot meet that condition of the special exception. That's correct.
Okay. Any other discussion? Call the question. Mr. Taylor made the motion. Mr. Akers made the second. All in favor, say aye.
Aye.
All opposed, nay.
Nay.
Chair detects division of the House. Mr. Black, how do you vote?
Nay.
Mr. Seeley, how do
Nay.
you vote? Mr. Underwood.
Aye.
Mr. Akers.
Aye.
Mr. Taylor.
Aye.
I vote aye as well. Motion carries 4-2. Our next issue will be, we did agenda item number 5 prior to the break. Our next agenda item will be the much anticipated financial and budget overviews that we're going to have. Mrs. Hatcher will give us a second quarter budget overview, status report. Then she's going to go through the debt summary. And then Mr. Cully's going to give us the 5-year plan. Let me make sure I have my notes. Oh, while she makes her way back, Mr. Cully, on the consent agenda, could you make this change for me? It says the approval of planning commission actions. I find that a little confusing to me sometimes.
It should have been to go to public hearing.
Well, no, it should say approval of planning commission schedule, because they're asking us to put things on the agenda or have a second reading. And if I was an applicant, I'd say, well, will you approve my thing on the consent agenda? But that's not really, so we want to say schedule just to make sure we're not confused, or at least try to not to confuse me, which is really easy. Mrs. Hatcher, before we really get started, what I detected on the board was there was a lot of, there was a desire on the board to make sure we had a good financial picture where we are, where we're going to go. Part of that, of course, goes with the quarterly report, and then the debt summary, and then the 5-year plan. So we appreciate you being here and doing this for Mr. Parton, and expect that we may do this a couple of times because these numbers are a little fluid, and we want to make sure we all understand. So you will start, if you're ready, with the second quarter budget status report. We'd appreciate it.
Yes, sir. Good evening, Chairman Thomas, members of the board, county staff. In your packet is the second quarter budget status report for the 6 months ending December 31st. This second quarter report is basically on a cash basis except for the utility funds, which are always on an accrual basis. As may be seen in the attached summaries, 51.7% of budgeted revenues for the major funds have been collected or billed. 50.6% of budgeted expenditures have been expended for the major funds. The percentage of revenue is higher than the same quarter last fiscal year, as are the expenditures. General fund revenues of $21,106,000, or 52.6% of the budget estimates. $1.7 million of this amount represents revenues recorded as receivable in FY12. Property collections are higher than the same quarter in fiscal year 2012. Sales tax revenue, as Ms. Curran mentioned, is lower than the same period last fiscal year and appear to be declining slightly. I believe this is because several businesses have closed during the past 12 months. Local communication taxes appear to have leveled off after several years of fluctuation due to the various lawsuits, which I don't think are totally over yet. Business license collections and recordation tax revenues are slightly higher in comparison to last fiscal year. Sales of real estate appear to be increasing slightly. Permits and fees are also higher than last fiscal year. All other revenue categories are higher than the same period last year. Total other local taxes, fines and forfeitures, and charges for services are slightly below the 50% threshold. And the total of the local taxes is your sales tax. Overall expenditures in the general fund are slightly below the 50% thresholds, as are most of the departments. All departments continue to be conservative in their spending. School revenue and expenditures on a cash basis and are just under the 50% threshold. Social service revenues are 48.5% of the budget. 172,000 of the $1,057,000 of revenue represent prior year receivable income. Expenditures are slightly below the 50% threshold, and both revenues and expenditures are slightly lower compared to last fiscal year. CSA revenues and expenditures are also below the 50% threshold. 171,000 of the CSF revenues collected are for prior year receivables. I keep mentioning what's prior year receivables because by the time we get to the fourth quarter, those will have been taken off and we'll be putting the new ones on. The CSA revenues are 0.3% higher than last fiscal year, and expenditures are 8.8% lower. Don't know why, but I think a lot of that is a timing issue. Debt retirement reflects revenues of 92.6%. $3.5 million represents the general fund transfer, and $636,000 reflects the dedicated personal property tax transfer. The general fund transfer will go down as the year goes through, but because the personal property tax collections are twice a year, and I can only move the amount that's actually been collected, it's going to adjust. Also in the revenues is the $1,085,000 that was borrowed under the QSAB funds, which were used to pay off part of the $3 million RAND for the school. So that number is skewing out your revenue projections and expenditure projections just a hair. Meals tax revenues are lower in the debt service fund than they were this time last year, which is the first decrease in several years. I don't know why, but they're just a little bit lower. Expenditures are 90% of the budget. Most of this is due to the timing of the debt service payments. Most of our principal payments are in the first half of the year. Operating revenues for the utility fund, 53% of budget, representing 5 months of billings. Operating expenses for the utility fund is 35.6% of the budget, well below the 50% threshold. Debt service for the utility fund is 60% of the budget due to the timing of the debt service payments. Should be noted that even at the 6-month mark, actual operating revenues continue to be greater than the actual operating expenditures for the utility fund. For the 6-month period, operating revenues were $579,000 higher than operating expenses. The Dawn Wastewater Fund billed operating revenues are 73.3% of budget. 31%, or $13,000 of the $44,000 billed, is for penalties. This is becoming an issue which will have to be addressed at a later date to do something about the penalties. The operating expenses are 14.3% of budget. Tourism reflects 49.5% of revenue collected and 37.9% of expenditures. As I say every quarter, transient occupancy taxes continue to decline, but they are slightly above the 50% threshold due to increased collection enforcements. Expenditures for the first half of the year appear to be on track with previous year expenditures, and departments continue to monitor expenses. Most revenue sources appear to be steady except sales tax and meals tax. Collection efforts are being increased for personal property and vehicle license revenues, as Ms. Curran said earlier this evening. Personal property taxes will show a decrease in the next 6 months due to the change in the method of the evaluation and the number of high-mileage vehicles if kept at the current tax rate. Your public service taxes are estimated to decrease also in the next 6 months by probably 8 to 10% due to the increased sales ratio for real estate. Anytime your sales ratio goes up, your public service taxes have to go down. As always, we continue to monitor the revenues and expenditures as well as any legislative issues. End of my report.
Okay, thank you for the first part, Ms. Hatcher. I'm sure there's a question or two. A couple of things you said, just for me. You said the meals tax collections were lower,
Yes,
and the meals taxes for us are dedicated for school debt retirement.
yes,
So anytime the meals taxes are lower, we have less money to pay for school debt retirement, which are probably things we've already borrowed money for, so we're taking money out of the general fund for that. And the other thing you mentioned was that there was $547,000, was that the number? $579,000 more for the utility system revenue versus operating expenses.
that's correct.
Sounds wonderful, great, I'd love to hear that. The reality is there are some debt service numbers for expansion that's not included in there,
That's correct.
and those numbers have to be taken care of by the number of connections we have.
That's correct.
And whereas we bill, this is more for the people that aren't close to this as we are, but when we create the system or do things like that, we're basically estimating what our connections will be every year for 20 years, or in this case, 30 years. So we might have thought we would get 50 connections or 75 connections, which are two numbers that stick in my head. And I think you said we had 33 last year, 17 and 16? 33 water, 16 sewer, something like that. But we're running behind in those connections.
We have 17 water and 16 sewer
17 water.
that have been paid for
Paid for,
this year.
right. So that's not enough to
That's
take care of the debt service. So when people say it looks like the system is having a problem, that's really where the issue is. But the reality is we have another thing on our website which says all of the investments we get from the water system. So it's another story. Questions for Mrs. Hatcher on the second quarter report at this time? Mr. Black?
Yeah, I just, there was a statement there about all departments being conservative in their spending, and, I mean, I know that's not just you, but we do appreciate that. I guess the one thing in your conclusion, and I'm not sure you're going to have the answer to this, but the thing that stuck out to me right here, personal property taxes will show a decline in the next 6 months due to a change in the method of valuation and the number of high mileage vehicles. Do we know a percentage of what that is going to? Because you said, for example, here on the basically you gave us an 8 to 10% drop at the end with public service taxes. But what are we looking at for the decline in personal property with the change of going from retail to going from retail to trade-in, correct? So what is the decline percentage-wise there?
The last time I spoke with Ms. Carter, it's going to be roughly 20%.
Okay. Thank you.
Let me just follow up on that because we were $1 million over last year. So is it 20% off that million or 20% off of a smaller number?
20% off a much bigger number.
20% off a bigger number because I'm also including the amount that we were estimating for proration when I say the 20%, even though your prorated amount is not in the current year budget. When the board discussed the personal property proration, it was decided at the time not to include the revenue from proration in there.
Right.
When I sat down with Ms. Carter and figured up the numbers based on 12 calendar year 12 numbers, added in an estimate for the proration, backed out 20%, you're going to be short.
So proration isn't even going to make us even.
Not at the current. If the tax rate stays the same, it will not make us even.
Okay.
Mr. Underwood? Ms. Akers? Just on this report.
Yeah, we talk about the meals tax, and I know you mentioned the meals tax is lower compared to last year at the same time. It's $19,000. I mean, it's not hundreds of thousands of dollars that it is short. It's $19,000 difference.
But it is
And-
the first time we've actually
I
seen
understand.
any kind of decrease in the meals tax, which
I
makes no sense, because
No.
everybody seems to want to eat.
Yeah, and I think that with the fact that hopefully it'll be a good spring and things are picking up and people start traveling again, that you'll see that $19,000 made up. But again, I just didn't want people to think that we're talking about hundreds of thousands of dollars shortfall, because that's not the case. It's only $19,000.
Ms. Seeley, you had a,
I know that
Address.
we've had some businesses sell in the county, and I don't know if Sharon Carter has shared that, but I guess I'm concerned that if we can figure out what they sold for and where they were in terms of their assessed value versus their sell value, to see what the delta there is.
I'd have to get that from Ms. Carter. I
That's
don't have-
fine, and I
have
think
that
she's aware,
information.
but I think that's going to have impact on us as well, and I think that's something we need to look at.
now, if you
Well,
want
you
to,
have to keep in mind for your real estate, until the reassessment is done, the numbers that are on the books stay that way regardless of what they sell for.
Okay.
and then the comment she made about the personal property tax or revenue would go down was based on the tax rate. And I think we all agreed that we thought we were increasing the tax a certain percentage last year, and it turned out to be a lot more. So we were looking at reducing the percentage this year. And then that's going to be a discussion we obviously have to make. Mrs. Carter is scheduled to come back before us in March to talk about just that, the projected revenue, and also some things that Mr. Wanted on the senior real estate program. So we can save those for March when Ms. Carter comes, and I think that's a good time. We'll have another chance to do that. Okay. That was your first step, kind of where we are. Your professional opinion is it looks pretty good for where we are right now. Snapshot of second quarter, that looks okay, right?
We're just going to have some issues for the year.
Okay. Well, now let's move into kind of our debt summary, which we've done a couple of times. I don't think we've done it publicly before. This is actually on our website right now. I saw it this evening myself. So, Mrs. Hatcher, if you want to take us through that, and we'll kind of see where we are and why we are in terms of debt service.
I'll do my best. I wasn't quite prepared to go through this document, even though I prepared it. So, this report is as of November 16th, 2012. And before I get too far into this report, understand that when you look at the 5-year plan, I was asked to bring this report up to date as of December 16th, which would include any payments of principal that have been paid between June 30th and November 16th, where the report prepared by Davenport is strictly on a fiscal year basis, comparing June to June to June to June. So the numbers are not going to match exactly, because I am accounting for retirement of the debt that has been paid from July 1st to November 16th.
Absolutely everything. So this is absolutely up to date, current,
No, it's not,
November
because
16th.
we're now January 15th, 22nd.
Well,
so
I mean, it's up to date based on November 16th.
based on November 16th.
All right, go ahead, Ms. Hatcher.
It's pretty much the same. That summary, the numbers have just changed a little bit as it was back in October of 2011. This is a report of the debt over the past 20 years. The terms of your debt are long-term debt, which are 15 to 30 years, which are for renovations, additions, construction projects, and various major equipment purchases, and short-term, 1 to 3 years, which includes your cash flow loans, current expenditure payments, and lease purchase agreements for equipment. The outstanding debt balance for all funds as of November 16, 2012 is general government debt is $34,085,789. School debt is $39,600,819. And utility funded debt is $44,015,200 for a total of $117,701,808. It's too many numbers to say, sorry. The utilities debt represents 37.4% of the total. Your school debt is 33.65%, and your general government debt is 28.96% of the debt. Caroline County's total debt per capita as of June 30th, 2011, not 12, because the 12 numbers aren't out yet. Our debt per capita is $4,151.81. In the 6 other jurisdictions, we're second to the highest, which is a difference from what it was over a year ago.
We're at 4151. Spotsylvania's at 4391, and King George's at 4,057.
That's correct.
So I'm not sure what percentage, but they're fairly close numbers.
They're close numbers, but each one of the jurisdictions have different issues and different funding sources
Right.
to help offset other things.
Okay.
The
Debt service
fiscal
payments.
year 2013 debt service payments for all funds equaled $9,591,516. This does not include the $4 million RAN. So just so you know, the RAN isn't considered, it's a debt, but it's not considered a long-term debt in the fact that it's paid within the same fiscal year in which it's borrowed. It's basically for cash flow. So it's not going to be reflected in these numbers.
I have a question.
Yes, sir. Mr. Akers.
Just make sure that I understand. Is the $4 million borrowed up front, or is the $4 million borrowed, is it sort of like a line of credit that we borrow as it is needed for cash flow, or do we borrow it up front?
It is borrowed up front. We bank it in the LGIP, use it, and then turn around and pay it back at the end of the fiscal year.
So we borrowed it in July?
It was actually August this year, I
I
think,
thought it was-
before we
yeah.
settled on it.
Because we need it in October.
We need it in October. We also need it around about March.
Maybe April.
Are we close to having a fund balance that'll inhibit us from having to do that?
We're going to address that in the 5-year plan. But we are close. But we're going to address that in the 5-year plan, because if we get rid of that, it has some other issues that are, kind of affect us.
We should be able to reduce it, but we have reduced it.
We should be able to reduce it. We have it. When you see the 5-year number where he shows a jump in debt service, you'll see what happens. Go ahead, Ms. Hatcher. So $9 million a year, $9.5 million a year is our debt service number for 2013.
2013.
Okay.
Of that, the general government debt payments are $3.3 million, as are the school debt payments, $3.3 million. Utility fund debt payments are $2.9 million. Each $1 million borrowed costs approximately $86,250 annually. The $86,250 equates to approximately 35% of 1 cent tax rate at today's values and interest rates. And then speaking of the effective tax rate, which would be your tax rate after your tax relief for the elderly and your land use programs.
And you said that $1 million borrowed represents $86,000 in debt service payment a year, based on a 20-year loan
Yes.
at 3%? Or is it the standard rate is 5? I think we get 3 for.
I think at the time that I spoke with Courtney, this was running between 3 and 4%, and it's at today's real estate values.
Okay. Thank you very much. Okay. So we can kind of like look at page 9, I guess, next. When we look at, just to give us a couple of years, we're talking $9.5 million in 2013, $10 million 2014, or 10.2 in 2015, $10 million almost even in 2016, and $14 million in 2017. Okay, and the jump in 2017 is
To pay off the pay off the $8.4 million ban.
Okay.
Did I